All right, everybody, thanks for joining us today. I have got a really cool guest. And if you've been online over the past few years, if you read any of the insurance magazines and journals, you know who Matt is. Matt, do you want to, for anybody that doesn't know, tell us a little bit about you and what you do?
Well, I'm not nearly as cool as you just made me out to be, but I feel like we need to hang out more just because of that. You could be like my entry song. No, I've been in insurance from the even before I was graduated college. I started as an intern, started my own agency after a few years writing for a direct company. Grew that agency, G&N Insurance, for 9 years before we were acquired in 2019. Now helping agencies do the same thing, who are interested in exploring their options and kind of bringing them along, telling them a lot about my experience being an owner operator builder, as well as through an exit, and what it could look like, and helping them and my team helping them kind of move all the way through that journey of making that big decision and helping them feel empowered and sort of clear what those expectations and steps would look like.
That's
But
awesome.
yeah, that's a high level sort of background.
That's cool. So I got started following you, I guess, prior to your exit. I was seeing everything for Babylon. And obviously, the focus of the call today is going to be helping agents who want to sell. But tell me a little bit about the success behind the agency, what propelled you guys forward, what built that brand.
Yeah, that's a great question. Anytime you bring me back to those days, I'll have a fun time with it. Uh, so there's different stages when you're growing from scratch. Like a lot of people know, stage one is just getting off the ground and creating enough revenue to make enough mistakes to continue to make enough revenue and hire and mismanage and misoperate, etc. So that was a couple years right off the bat. When we got our feet under us and we had enough revenue to sort of like feel good, like we made it, we started reinvesting and asking the right questions about what we're doing, how we're doing it, what's working, what's not working. And I think at that time, call it like 2012, 2 years in, my partner Zach and I really focused on, not all leads that come in the door are equal.
Right.
Some close at a lot better clip. Some, are much easier to work with. Sales cycle is different, policies per client's different, revenue per client's different, et cetera. So sort of hyper focused in at that time in the real estate industry, call it realtors, mortgage brokers, loan officers, attorneys, et cetera. And we just did old school networking with them. We just met as many freaking people as possible. We had fun with it. We made people into bobbleheads in 2013 or so. Um, which was a lot of fun because we'd be able to enter into the relationship and create a custom bobblehead, which was all really
Right.
weird but also pretty cool and unique. And so that took off. We made over 1,300 of those over the years, which was a lot of fun, and it spawned into video series and podcasts and a consulting firm that we had. But really, it allowed us to kind of circle our brand around something fun and interesting and exciting. Eventually, we got to a point where we were able to scale networking through social media, through vlogging, through podcasting and content creation. It allowed us to stay top of mind with a lot of referral partners and clients that generated more and more opportunities. And if we were the first thing they thought of when they thought of
Right.
insurance, it was a good thing. Um, Throughout that journey, we evolved because staying up till 3 in the morning to try to answer questions and emails does only last so long. And networking through the evening you can only do that so many times before you start to burn out. So started really investing in coaching and consulting and bringing people to help us become better business owners. It's really we were just insurance salesmen and then principals
Right.
and operators, managers. We really weren't like solid leaders and understanding of how the business operates. And so we invested in ourselves for years. And then we got to the point where the business was operating really efficiently, effectively, with good leadership team, really strong processes that were written out and followed by all, good technology, et cetera. So it allowed us to lean into consulting, which eventually we were able to, help 70, 75 different insurance agencies across the country kind of do what we had done. And then eventually that led us to consider what's next, and for us, exploring what a sale could look like. But I don't know if that answered your question
Yeah.
directly, but that
No, that's perfect. That's awesome.
hyper focusing in on the niche, Tyler, and then being able to like kind of just generate content in all different ways and
Yeah,
hitting that hard consistently for a while, it really helped.
that's cool. Well, tell me about the process, what led to the sale, and I guess a little intro about what you guys learned going into it and what brought about Legacy Advisors.
Yeah. So um, we weren't looking to sell at all. There
Okay.
was no interest. There was no interest in selling the business. Partly because we were growing. We were growing fast. Still, we were insuring 7% of all home sales in Massachusetts in the
Wow.
17, 18. Like we were moving. We were moving. There was a tailwind behind us. And I had this like misconception that selling meant like bag of money over your shoulder, which isn't bad, but bag of money over your shoulder, jump on a horse, ride off into the sunset.
Right.
And I think at the time I was in my mid 30s. I was like, I'm not interested in that. Uh, but my advisors had basically said for a number of years, you need to get a good evaluation. You need to learn more about what's out there, just so you have a baseline to work off of. So just like educating yourself to be a better business owner, I started educating myself around what that could look like, the different buyer profiles, what that buyer universe looked like, the different deal structures that were out there, why private equity had been so strong and loved the space and invested and acquired so much so actively for many, many years. Got a valuation for the business, was a little shocked in a good way. And more so, though, eliminated one fear at a time when it came to the deal components of the
Mhm.
structure of the deal. It's like one concern that I had that I think a lot of agency owners have that still want to be involved and still want to continue to be in the industry was that like I didn't want to not be an owner in any way. Like I like that ownership concept. I wanted to de-risk and take chips off
Yep.
the table because you have this illiquid asset of the agency that you've like a delayed gratification model making like very little amount of money for many years. You
Right.
want to be able to like capitalize on it eventually, but I didn't want to like lose ownership. And so I realized that there were buyers out there who would allow me to kind of take advantage of that multiple and guaranteed cash up front, but also allow me to take equity in their business. That was really interesting. I was like, all right, I can not no longer going to be a 50% owner of a $5 million revenue agency, but I can be a 1% owner or a 0.5% owner of a $200 million agency. That's kind of cool. And I can get that
Right.
guaranteed security and safety net. Then the other fear was, we're growing. Like, why not just wait? I don't want to miss out on future growth and future, asset value. And the earnout component of the deal structure that a lot of buyers offer really reduced that fear and concern. That I could capitalize up front on, and then benefit from the future growth. Maybe not at the same multiple, but benefit of the future growth. They have windfalls, future carrots kind of work towards.
Yep.
That was really interesting to me. And ultimately, that was one of the big aha moments that allowed me to kind of proceed. And the fact that I could continue to run the team and manage the team, and everyone on the team would be valued. And it was important to not have like 3 or 4 people of our team let go because there was
Right.
redundancy. And sorry, Sally, but we have an admin. You don't no longer are needed. Like I didn't want that environment, and be able to find a partner that really valued everything that we had to offer the deal structure components that made sense to me and reduce the fear concerns I had of selling. It got to the point where I was like, this is just makes sense on all fronts. And so we were end up acquired in 2019, at the end of 2019. And to answer your second question, the process of selling the business was very stressful.
Right.
Obviously, it's a huge decision. It's carries so much weight emotionally, financially, not just for you, but generations, after in a lot of cases. And so you don't want to make the wrong moves. And every single stage you're encountering like a big, setback or a hurdle to overcome. And it's really difficult. And I had people that supported us and I valued their guidance, and they got us great financial outcomes. And I think the world of them. The process, though, that I knew how to build an experience from years of doing so at thousands and thousands of clients, on the agency side, I was like, it really comes down to, building a process that's repeatable, whether you're doing it or not, making sure that your attention to detail is through the roof, right? That you're setting expectations along the way at every stage. You're communicating and following through on those expectations, and you're doing so over and over and over at every medium the client wants to be communicated with. So it was a clear next chapter. Is like there's a lot of agencies out there that sell direct from to a buyer that don't know that advisors even exist, that investment banking and advisory services are even out there and what that looks like.
Mhm.
So there's a huge population of agency owners that are getting taken advantage of. They might be getting a good multiple, but it might be on a compressed margin. Then they could leave millions on the table. Or sometimes even worse, they choose the wrong partner. And day two, they wake up and they're regretful
Right.
because this isn't what they signed up for. It's not what they wanted. Yeah, they have a larger bank account, but they're not happy with it go forward. So for those reasons, I was like, we can do this on our own. Next chapter will be helping advise agency owners. Surrounded myself with two phenomenal partners, and a great team of finance minded individuals, CPAs, and people that have worked on the buy side for many years, and in investment banking, that private equity that could come to the table and say, all right, here's what works at Goldman Sachs, here's what works, and able to bring all those best practices in to kind of mirror and strengthen the already level of empathy and trust that we have because we came from the agency space, and we know what it's like to exit. So yeah, it's been the tremendously fulfilling aspect of next chapter.
That's cool. That's awesome. So as you've talked, there were several things you had going inside your agency that I'm sure increased multiple. So obviously you had a strong relationship with a ton of referral partners. You'd started building a really strong brand online. You had a growth rate that was pretty crazy. They could see, like you mentioned, 7% of home sales. And then you had SOPs, processes, etc. That stuff's not easy to do. So for an agent that's not looking to sell right now, but maybe in 5 or 10 years, I mean, when do you start working on this stuff? Obviously, the answer should be yesterday, but what tips do you have for agents there? Because that was not an easy undertaking for you to build all of that value.
Yeah. So great question. And a lot of those things you just mentioned, none of those things were done because we wanted to sell for maximum value. They were done because we knew that we needed to control the business and not
Right.
have the business control us. We wanted to control the chaos and not have it control us. And so
Right.
a lot of that stuff that came from just like the pain of operating a growing, fast growing business. So I'd say that whether someone's ready to sell now, 5 years from now, or never sell, they should take a serious look at how their business is operating and potentially invest in consultants and coaches to come in and help them, not just tell me what you want to achieve, but actually here's a business system, right? Whether you are a plumber, electrician, insurance agency owner, dentist office, you need to be operating on a system, right? That has leadership team and weekly structured meetings and strong KPIs and a way to bring issues to the table and solve those issues collectively and delegate appropriately and accountability through organizational charts and all the things that core values to determine who should be coming in and who shouldn't be in that agency,
Yeah.
goal setting, quarterly meetings, annual retreats, all the things that like long term build a super strong foundation and a team that's running the business, not just you. All that stuff should be done, like regardless of whether you sell or not. I'd say that people who are interested at exploring, hey, like I don't want to leave this business to my next generation. At least I'm not sure I want to, right? And I don't want to run this for another 20 years. I'm interested in doing this for 3 to 5 or 7 or maybe 10 more years. They should start having conversations today about how our business is valued.
Yep.
How would my business be valued today? Right? That gives you such a clear baseline, right? And if you go through that process with us or someone else, right, you have a really good understanding afterwards of like, okay, my revenue needs to get to this point in order for me to achieve the number I want. My profitability margin needs to be at this, or I'm going to be leaving a lot of money on the table. That you can say, hey, I need to invest in outside producers because the only way I can get to this spot is through organic growth at this rate. I need to be careful with hiring additional processors and CSRs. I should be looking at VAs and discussing, what that could look like for my team because expanding margin is going to help my value. understanding how your agency is valued today informs decisions, whether you sell tomorrow or in 6 years from now.
Right.
And so I think that that's where I would start with a lot of people. It's like, and that's where we start with a lot of conversations. It's like we don't sell anyone on selling. Half more than half the people shouldn't be selling if they talk to us, right? We'll even go through valuations and tell you, Tyler, you're not ready. Like in a nice way, but like
Right.
you're not ready. And I'm saying you're not ready because you'd be leaving a lot of money on the table if you sold the asset today, right? You go through the experience and you realize, oh my God, like we're spending this on that, and the benchmarks are here. Like we got to make strategic changes. So I think it informs, and you learn a lot more about what the process is to sell the business. And because we'll have conversations with people, and they're like, is this like a 3-week thing or a 3-year thing?
Yep.
And you should know, right? You should understand. The more you know about what that looks like, I think the better, not just the better decision making you make, but your comfort level and confidence just goes through the roof.
Right. That's cool. Tell me a little bit about, obviously there's so many factors that go into book valuation.
Mm.
As you hit different revenue rungs, I guess multiple increases. There's also other levers that agents can pull. You were talking about profitability. What's some high level things agents should think about to help them understand ways to increase their multiple when they hit X amount in revenue, when they've got set systems in place, set profit margins, et cetera?
Mhm. I'll break it into two camps. So
Okay.
I'd say sub 800,000 in revenue. A lot of those agencies are trading on a revenue multiple.
Yep.
And I think with those agencies, the faster you're growing and the cleaner your book of business is, the more attractive you are to any acquirer,
Right.
because they're looking at it as, all right, it's a $500,000 of revenue, but if I buy this at this multiple and you're still growing at 30%, and in 4 years, this is what the asset's going to look like under my infrastructure, and I'm trading at this multiple, they can be aggressive with their offer. And that goes for any agency, but specifically for smaller books, like if you're growing fast, you have strong leadership that plans to continue, and your book of business is clean and profitable, that's where you're going to see your value. Now, the group that's above that, call it anyone over 800 or let's just say $1 million of revenue or more.
Yep.
The pace of growth matters for sure. The faster you're growing, the more attractive you are, and that's going to be reflected in the multiple that's offered. But ultimately, you're going to be trading on a multiple of EBITDA, not revenue, for most agency buyers. And so your profitability margin is going to be what really drives most of the value. For example, like if you're operating on a 20% margin, let's just say pro forma margins. This is after you've actually worked with a group like us to expand that margin and get the most on paper that you could sell for. It's that you're at 20% and someone's offering you a 10x multiple for your business. Wow, that's $2 million. That's awesome. But if you could get that margin up to 40% through growing into that expense load, making additional changes to the business, maybe you have a person that's retiring in a year and you can help them, earlier by giving them more upfront. Like there's a lot of different strategies you can take, but you get that to a 40% margin, even at an 8x, you're making so much more. I think the focus in the industry is on that multiple because it's so simple and easy to compare.
Right.
It's really your margin. So anyone that's trading on an EBITDA multiple should really try to get that profitability as high as possible before they go to market. A lot of that can be engineered, like through a valuation exercise to figure out like these expenses don't relate to revenue generation and they're not needed in a larger infrastructure, a larger business. Ownership compensation, certain producer comps, marketing spends, one-time discretionary spend, personal stuff, all that could be ripped out. But like, yeah, your margin matters. Then it's scale. It's like the larger agencies are going to get, there's transactional costs with every single acquisition. So the larger agencies are going to get a higher multiple just because the buyers don't have to buy as many of them. And they have deeper bench of leadership and infrastructure. So if the principal leaves in the future, they know that the book of business is preserved, it's stickier. A lot of times those agencies have a wider, kind of book of business is more broad and stronger in different areas, or they have a strong niche that have helped them grow. Leadership team matters. If you have people that are on your team that are have been with you for a long time and you want to promote them and put them in a leadership role, that's going to be attractive. When you go to market and you can talk about, hey, Jim and Susan have been head of sales and head of service, promoted them last year. They've been with me for 8 to 12 years each. They're phenomenal. They run the teams. And buyers are going to look at that and say, wow, these two individuals can run this business without the principal for the most part. It just makes it a more attractive asset opposed to what a lot of agencies, look like, which is Tyler and Matt, like the owners of the business, everything relies on them. It's a little bit scarier to acquire that. Book of business matters, but my issue with that is people are like, Harold, it's commercial better than personal, better than employee benefits and Medicare. Well, they all are going to have different ranges of multiples, but whatever has gotten you to where you are can probably get you to where you want to be quicker and easier than shifting your entire
Right.
strategy to a different line of business. So I think like whatever's going to allow you to grow faster is probably better than the line of business you choose to grow in.
That's a cool rationale. Don't change the wheels. Go with whoever brought you to the dance. That's neat. What do you think? Obviously, at this point, you've seen a lot of different stuff, talked to a lot of agents. What's the biggest thing agents are doing wrong or get wrong that you've seen thus far, or something they just don't understand when they get to the table to have a conversation with you?
Hmm. Well, I would say that the formal process of being represented and going to market in a specific way on your terms and curating a list of buyers that really, really want what you have to offer, it generates outsized returns. And I think a lot of agency owners look at an advisor like us or an investment bank, whatever, as an expense. Like I got to sell my business for X. They're going to take X what percentage, right, of my business, and I think that frame keeps them from having conversations. It keeps them from asking questions and taking those initial non-committal steps to learn more, right?
Hmm.
Whether it's us or somebody else, like there's so many points of the sales process and the journey, even a year before going to market, that will return significant,
Yeah.
upside relative to any fee that anyone spends. So I think it's really hard to go to market professionally and do it over a 6 to 8 month period the right way, where when you're at the end, you're thinking to yourself, I made all the right decisions when it mattered most. I chose the right partner out of a sea of options. I was able to define what I wanted, and I only met with the 8 to 12, right, that want what I have to offer, and created a competitive environment in a controlled time frame that yielded the best possible offers and then negotiated those offers. Like it's so hard to do that on your own. There's 70, 75 highly acquisitive, P-backed, publicly traded, and strategic regionals that like you can't talk to all of them, right? And
Right.
so you go down the road with one or two or three, you really limit yourself and you don't get the perspective that I think you really deserve when you're making such a big monumental decision. So I think that's one area where like I know it's self-serving in some ways to say that because like,
Yeah.
but
I
I
get.
truly believe like whether it was us or somebody else, like hiring a professional team to help you manage that process, let alone the labor hours associated with going through confirmatory diligence, where you've gone through like months of preparation, financial and non-financial. You've built a sim, marketing materials. You've talked to a ton of different buyers. You feel like you've chosen the right one. You've signed the letter of intent. Now you go into diligence, which is like 3 months potentially or more of like forensic level,
Yeah.
investigation in your business. Because before they pay you millions of dollars, they want to make sure that your bank accounts are correct and your vendor contracts are in your legal framework and your book of business. They want to look at everything, and they're going to hire a buy side diligence firm to do that. And doing that on your own is a full time job, and you're also running an agency the whole time. So it's like, let alone the labor hours, but really it's the return on your whatever fee you're paying an advisor. I know it's self-serving, but it's by
Yeah.
far the most important thing.
That makes sense. I get it. I've chatted with agents who have said similar things, but the whole idea is, look, you don't hire Matt because you like Matt and you want to pay Matt. You hire Matt because he helps you sell your agency for more money. So the whole point of your offer is, hey, we make it more valuable and make it a lot less stressful. And so I think there's massive value in both of those. Uh,
We had a client last year who came to us with a letter of intent in hand. So he had gone down
right.
the road. I mean, that's a long time preparing and actually having conversations, talking to a buyer. They gave him a phenomenal offer. It was like over 4x revenue for the business. It was a $10 million offer. It was phenomenal offer. He showed it to us and we're like, this is a great offer. Like, what's going on? What do you want our help for? And he's like, well, I don't know if it's the best I could get, but more importantly, I'm not sure. I've only talked to one buyer and I only make this decision once. So
Yeah.
like, God forbid I move forward, I leave a couple million on the table and I choose the wrong partner. I hate my life day two. So he hired us 45 days later. That same buyer, after going through a process of curating from 70 down to 15, down to 3, that same buyer increased their offer from 10 to 12.6.
Wow.
So he got 2.6 million more. Now he might have paid us $500,000, but he got $2.6 million more, right? So net 2.1 million more than he would have on his own.
Yep.
He didn't choose them. He went with another group that offered them $200,000 less, so 12.4, right? But was a much better culture fit for his team. He wake up day two with the autonomy level that he wanted. He was able to pay his personal producers that produce personal business commissions, whereas the other group wouldn't have allowed him to do that. Like, I mean, he's still with them a year later. He's happy. He's in a good spot, and that's the key. Is like get the great financial outcome, feel really good about it, but also like if you want to be involved in the agency for a number of years, like you want it to be a good working experience,
So you keep touching on this point of day two. Explain that a little bit, because I think that's a neat way that you
Hmm.
kind of focus in and frame things.
We have three personas of agency sellers that we talk about. One is the principal who loves to sell. They're a salesperson at heart. They don't like all the other stuff: HR, IT, admin, accounting, all the other things, running the business, managing the team. And they just want to get back to that. They want more access to more markets. They want to access to more resources, technology, support. They want to offshore everything else. That's a great seller, right? And they look at a buyer and they say, hey, you can offer me all this stuff. I don't want to do all the stuff you're going to do. Fantastic. So they go to market and they transact and they want to stay on with that group for a long period of time afterwards. They don't have an intention of leaving the industry.
Right.
They just don't want to do the stuff that they don't like doing. So in that persona, it's really important that if they're going to stay around for 5-10 years, that it's a fun environment, that they enjoy it, that they know who they're going to be working with day to day afterwards. They know what type of decisions they will be making for the agency and the team, and they know the decisions they won't be making. They'll understand what the culture looks like and what the long-term vision of that partner is. If it's a private equity backed business, where they are in their journey in terms of growth and strategy and the backer they have, and the last recapitalization event that they had, all those things you need to know eyes wide open walking through this process to feel really good about a decision. The second persona is not much different, which is the agency owner like me who was looking to take chips off the table but continue. Know that long term I didn't want to do it forever, but I wasn't interested in just riding off into the sunset. And especially for that group, same as the first group, you care about the day two, who you're going to be working with day to day and what that's going to look like in your day-to-day life. And like, are you going to be reporting to 6 different middle managers, or are you going to have like the level of autonomy that you've come to really appreciate? And the third group is like ready to just exit. They want to retire immediately or within the next 6 months. Or we've had somebody who wanted to race cars and that's all he wanted to do. And that's so like that, you allow them to do that. Now that group, right, you might not care as much personally about your day two, but you care about your team and everyone does, at least anyone we want to work with.
Yep.
Right. And those individuals, they care about their, the team afterwards. They want to make sure that their salaries or compensations equal or if not better than what they are under the current infrastructure. They want to know there's opportunities for them to career grow, like have career growth and advance in their careers into roles that they couldn't have under their infrastructure. They care about their clients and make sure that everyone's preserved and are in a good enough position. So under all three personas, like that day two matters. And going through the process, talking to as many groups that likely will match up, and also interviewing them and asking questions that you care about getting answers to. It matters.
A lot of times when people talk about a PE buyout and an equity firm coming in to purchase a business, there's just horror stories. Oh, they're going to strip the team down, sell it for parts, get rid of tons of employees. How much do you actually see some of these horror stories? How grounded is it? I'm sure some spots are better than others. What do you see there?
Yeah, no PE backed agency is equal to the to another or the same to another. Like there is a wide range, and depending on the seller and what their goals are as part of the transition and transaction, dictates which groups you should meet with and specifically which ones you should not meet with. There are definitely groups that are multi-billion dollars of revenue. They have their infrastructure, their way, their process. And if you sell to them, there is a greater likelihood that you will have to merge and mesh immediately into their system. And that could be redundancy of employees is we're not going to need these people because we already have them. It could be you're migrating your systems, your management system, your CRM, your banking, your accounting, your payroll, your IT, everything day 90 or 30 or 60, and that's it. You have no other options. And then there's other groups. They're like, we've got 40 people in corporate. We don't have any middle managers. Our middle management is basically ex principals that we've acquired our agency who are currently equity holders and stakeholders in the business and have an interest in our continued growth. We're 300 million revenue, which sounds big, but we want to be at 3 billion in 6 to 10 years. Can you help us get there? And what that will look like is, yes, we're going to take over your accounting and your payroll and your banking because we're a professional service business and we
Right.
have to have that transparency. But your systems, your management systems and CRMs and the things that have helped you get to this point, that might be a slower migration over the next 3 to 5 years, right? So the earlier stage you get, probably the more autonomy you have and the more decision making and control you have. In our particular case, we wanted the maximum autonomy, maximum control for as long as possible.
Yep.
And so, you looking at a PE backed agency or another firm that's a little bit earlier in their growth. One, probably meshes with your day two needs, but two, there's also equity appreciation opportunities that might not be the same as a $800 million revenue agency.
That's cool. How much are you seeing? I mean, there's massive consolidation inside the industry, especially in the top 10. How much is that changing things and changing the landscape right now for the everyday agency owner who's potentially looking to sell?
Yeah, there's definitely a lot of consolidation. I think it's interesting. Multiples, over the last few years have been at all-time highs, higher than what they were when I sold, and I thought it was all-time high then, which it was, but it continued to go up.
Right.
I think that we're starting to see. I answer this in a couple of ways. We're starting to see a little bit of a shift where for many years, debt was cheap, almost free. So these large firms were raising a tremendous amount of debt to acquire these agencies, call it 6, 7, 8, 9, 10, 12, 14 times EBITDA, because internally they were measuring their valuation at 17 to 20 to 22. So they were getting that immediate lift in arbitrage. And they could raise as much debt and not worry about that, the cost of capital as much. With interest rates being elevated as much as they have been over the last, 4 or 5 years, I think the big buyers are being much more discerning and doing their diligence up front as to not just buying revenue and buying EBITDA for sake of arbitrage play. More so, will this asset perform well in the future? Which is the way M&A should be thought through. Like, I think you don't even just buying for buying sake, and because of that, well-performing assets with good leaders who are growing, whether they're small, big, medium, whatever, but are growing, have a plan to grow, have a plan to stick around, are getting still really, really healthy valuations. Agencies that are stagnant or shrinking with a book of business that may not be like maybe primarily a non-standard book of business, which is still attractive to certain groups, but there's just less groups that want that. They might not have a plan to stick around after the fact. They don't have a deep bench. Those agencies are going to be discounted more than they would have been 3, 4, 5 years ago.
Gotcha.
We're seeing that shift in the market. I think that there's still a tremendous amount of competition. There's some fear around AI and how that's going to influence personal lines and transactional based books of business. I think that's a little overblown, but there's some reality to it. We're seeing that in the publicly traded companies and their share price, and that's come down 25-30% in the last 6 months. I think that's overblown and it's going to overreaction. It's going to come back up, but that trickles down to the private equity backed buyers and everybody else, where they're being a little bit more careful with what they're acquiring. And so it's extra important to present yourself in the most positive light possible to the right buyers that want you, and ideally be in a healthy position, meaning you're growing. Even if it's 5%, 3%, 8%, you're growing month over month over month, because that's a safer bet for a lot of the buyers. I think it's going to there's going to be continued consolidation. At the same time, though, there's a ton of producers that are starting to run agencies. A lot of like ex-agency owners that sold 10 years ago that are launching new opportunities. There's niche-based agencies, there's MGAs, there's so many new entrants into the space. I don't see I mean, the the market's only so big, so there is a question mark in my head as to like, how does this go on forever? There's
Right.
not like a significant increase in the businesses and the humans that are insuring the risks, but there's a backfill of a lot of really strong upstarts, and it's never been easier to start a business in this industry,
Right.
in terms of like upfront capital and knowledge of how to do what to do. For the first 2 years of running the agency, I think we were spelling Accord as like Honda Accord, not Accord like Accord form. It's like people don't make that mistake anymore.
That's funny. That's true. Well, tell me a little bit about why, if somebody's looking to sell or if they're just somewhat inquisitive, why should they call you? What makes you
Mm.
guys different? Obviously, you've got experience, but tell me a little bit about your process.
Yeah. So a few things that we really are proud about. One, and they're differentiators. One, we're the only advisory service in the industry that have multiple partners that were ex-agency owners that founded, scaled, and exited. That really, I think that offers a different, unique lens.
Yep.
We can speak about our personal experiences. We know a lot of the questions asked, and frankly, when we're in management meetings, we know more about insurance than a lot of the buying M&A firms, and M&A teams. And so it positions us strongly, and it builds a lot of, I think, trust and empathy across the table. Two, we don't do any buy side diligence work. A lot of the advisory firms and bankers that are in the space, it's a good business model to do buy side diligence, which basically means like Hub, for example. I'm just picking on them.
Right.
They want to buy a business, they're going to hire a banking firm to do the buy side diligence work after they sign an LOI. They build a pro forma, the model, they work through the financials, they agree to whatever the sales price is going to be post LOI. A lot of firms do that work. We don't, for two reasons. One, it's way more fun working with sellers and eking out a couple more $1 million for them in the middle of nowhere,
Yep.
Iowa, right? It's so much more fun helping them, and it's a lot of family owned businesses, and they've worked on it for sometimes 3 generations, and so like helping them is so much more fun. Two, it's a conflict of interest. If we're representing that agency in Iowa in the morning, right, to Hub, for example, but we're being paid by Hub later in the afternoon to do a buy side engagement, there's a huge conflict of interest.
Right.
You can't stand on 2 feet. That's a big difference. I think the most important, though, is that we don't sell anyone on selling. We're so adamant about making sure that you make all the right decisions when it matters most, and that starts with the very beginning. So like we don't charge for evaluation. We don't charge a retainer. We're fully aligned with the success of the sale of the business, whether it's in 6 months or in 6 years. And if we don't think that the business is prepared and ready to go, we tell our prospective seller and client that you shouldn't move forward. And if they want to, of course, we're going to help them. But like we're fully transparent because we want the best for them, and we want playing long games with long people, right? I've been doing that for 2 decades, and I want to continue doing that. We got to make sure that we're working with integrity, and I think people appreciate that. Those initial conversations, they aren't as intimidating, and it's much more about educating them, empowering them, and then valuing their business and sharing with them. Here's all the things you could be doing differently, or yeah, you're in a great position. Here's your value range. Here's what an earnout could look like, equity. your go forward salary and commissions, and just empowering them with information before asking for any commitment, any engagement. And I think that's worked really well for us so far. The last 3 years is I think has resonated with the market. So we're going to continue to do it.
That's cool. That's awesome. Well, if somebody's listened to this and they are interested in having a conversation with you, what's the next step somebody should take? Where should they go?
They can shoot me an email, which is Matt at legacy-advisors.com. They can find me on LinkedIn and send me a direct message. They can go on our website, which is legacy-advisors.com, and submit inquiry on there. However they want to, they can connect. Typically, we have an intro call. I learn more about what the owner is looking to do, what their goals are, what their timeline is, what their expectations are, figure out if it's a good fit for us and for them before we even get into evaluation to conversation. And that's a good place to start.
That's cool. That's awesome. Well, Matt, thank you so much for your time today. You gave a ton of value. I took a bunch of notes while we were chatting. So, thank you again, everybody. Hope you enjoy. Reach out to Matt. I will put his contact information below, and y'all have a good one. Talk soon.